The market open on February 20th, 2026 reveals a violent bisection of the technology sector. On one side, we have the Rubin Covenant, a definitive structural alliance between Nvidia and Meta that has effectively re-rated the hardware stack. On the other, the AI scare trade is liquidating labor-intensive industries, with the software sector trading at its lowest multiples since 2022. While logistics firms like RXO and C.H. Robinson face double-digit drawdowns on fears of a 400% displacement of human workflows. The Mag 7 generals are attempting to hold their 200-day moving averages in a confused sea of macroeconomic data. We are no longer observing a momentum trade, we are observing a total capital realignment toward the physical economy of intelligence. The scale of the current fiscal cycle is without historical precedent. We are tracking a combined capital expenditure surge of $650 billion across the four primary hyperscalers. Amazon leads the allocation with a guidance of $200 billion, a 53% year-over-year increase, marking the most aggressive investment program in corporate history. Meta is pivoting toward personal superintelligence with a projected spend between $115 billion and $135 billion. The balance sheet impact event is palpable. Barclays is modeling a 90% decline in Meta's free cash flow, while Alphabet's long-term debt has surged fourfold to $46.5 billion. Technically, Nvidia remains the solitary beneficiary of this sovereignty war, trading near $188 with $350 billion in midterm pipeline visibility. However, with the S&P 500 RSI currently sitting at 48 and Q4 GDP growth slowing to a tepid 1.4%, the market is scrutinizing the widening deployment monetization friction. The era of weightless digital growth is over. AI is now a physical asset forged from critical minerals and liquid-cooled infrastructure. Our 5-year outlook suggests that the Magnificent Seven narrative is fragmenting into a hierarchy of sovereign AI. By 2030, we expect the market for independent national intelligence stacks to reach $600 billion. The India AI Impact Summit has already signaled the shift, with nations moving to bypass traditional cloud dependencies through algorithmic efficiency and domestic infrastructure. The long-term winners will not be defined by software subscriptions, but by their compute moats. We expect a continued rotation out of nice-to-have discretionary tech and into the energy and cooling sectors that provide the thermal and electrical floor for the Vera Rubin architecture. Investors must transition from chasing AI-linked narratives to auditing the actual revenue to expenditure latency of these massive data center builds. This is institutional-grade intel for the modern portfolio. If you require this level of clinical analysis daily, hit the subscribe button for our 6 a.m. notifications. We will continue to monitor the Rubin deployment and the AI scare trade as they develop. We'll see you at the opening bell.